Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 17th, 2016. It is about, or exactly 10:18 Eastern Time, so the market's been open trading for a little less than an hour now as I'm starting this video. And figured it's the shipping sector is what we're going to go over today. There's just so many names and they're explosive. For those of you who followed the site for a while, for years now, I've always maintained that the two most volatile sectors out there, or the single most, I should say, is the shipping sector. Historically, is the way I've traded. And now marijuana is starting to knocked that one off its throne just recently with a lot going on. But like I said, I've traded the shippers for many years. There's a lot of videos. You can reference posts on the site. And I know of no other sector that can produce such big gains or losses. Remember, volatility cuts both ways. I cannot emphasize that enough. But again, over the years, we've had trades, 50, 100, 200, 300% on some of these trades, official, unofficial. They're popping here. Thank you. Somebody pointed out in the trading room. Usually I've got an eye on this sector and really, and I did do a video a couple months ago and they didn't take off then, so I kind of backed off. Anyways, there's a lot of activity. Let me stop talking and just dive into the charts here. Now, there's so many charts in the sector. I was going to take the time and try to go through some of my favorite, but that's taken a while, and a lot of these guys are popping, so I'm going to fly through this. What I suggest is if you see a pattern you like, or a stock you're trading, just pause the video, look at the charts, drop me a line if you're a member of the site. I'll be more than glad to give you some additional levels or my thoughts on a stock. A lot of these charts I will mock up as I go here, meaning put on the annotations, resistance levels, previous reaction highs. So there's one. This one I had yesterday. I was going to share. There's so many. That's why I'm having to do the video again. I put one official trade ID up yesterday. That was FRO. And there's so many like this one, and it popped out. I was watching it yesterday. It looked a little extended to get here. I thought it would come back in, but again, when the momentum's in the sector, I didn't want to chase that one yesterday. And now today it just gapped up above that downtrend line and exploded. There was also some horizontal resistance here. But you can see this. Most importantly, it's in a resistance zone. I wouldn't chase this one now. It's at the top of this resistance zone. There's a little resistance above there. You can see these reactions right about there is where I'd put it. So again, that one kind of missed the boat there, and it's already come back in. All right, I have the list. Here's a big list. I'll try to get through as many of these as I can in keeping this video as short as possible. And I'm just going to click down. I have them sorted right now by percentage gains. So you're going to see the big winners today, but that's not necessarily my favorites. It's just how I sorted this list. GSL, oh man, like I said, these things have just exploded. Makes it look like the marijuana stocks lately. There was a gain of 300% in just a few days. So point being that, and this looks like actually must have been a setup I had here. I had these targets before, and this one's just blasted by that target. And, see a little fake out move you see in the sector, and this is common. This is when you see a bearish breakdown that then proves to be just a whipsaw signal. This was a break below this downtrend line, this descending, or this triangle pattern here, formed another downtrend line, which I just added there, took out that downtrend line. Oh, that's another point I want to make here. Just like the marijuana stocks, these shippers behave so well to the technicals. This isn't about fundamentals. Maybe there's something going on right now in the sector, but again, and I've said this for years, I know of no other sector like the shippers that when the momentum traders come in play, they love to play with this sector. They get in and they get out. So it's like a game of musical chairs. If you're fast or you want to make quick profits, it's here. But you don't want to be the guy standing without a chair when the music stops. The guy or the gal, that is, because these guys can fall again, and they will just as fast as they rise once the momentum leaves the sector. This is overdone. Whatever happened to cause a 1 week or less rally of 311% in GSL, I can almost assure you that's a little, quite a bit overdone. And I don't, unless this company, which I don't think this is a buyout or anything. If it's a buyout, you see the company come up to the buyout price and hover there. So this guy will probably come back in. I'll bet you within the next week or so comes back down to the 250 level. So you want to, if you're aggressive, short of here, there's about a 34% drop because this one got ahead of itself. But you got to be careful. The momentum's still there. You got to wait to see the momentum leave. Some of these I don't have much on, so I'm not going to go over anything on the chart. NMM, covered this one many times over the recent years. What we're looking at here, and as I go through these videos, if I don't point it out on some of these, look for things such as basing patterns. You can see how this one based in the last year or so, about over a year, and it finally took out this base right here. So each of the lines on these charts are levels. Now you do have a pretty significant resistance level right here. So we'll go across here, resistance zone. It's very thin above that. You can see the volume price histogram over here, how the bars are thin. So I expect a reaction. This one has already run up. And again, don't underestimate these gains. It's gone up 152%. It's a low price stock. These have a low float. That's why they can go up so much. It doesn't take a lot of buying pressure, just like with those marijuana stocks. I mentioned that. That's why they can go up 300, 400, 500% or more, because there's hardly any shares out there, so it doesn't take a lot of buying. It's a big world out there with a lot of people, a lot of money, and so it's hard to move a stock like Apple or Facebook, because there's so many shares out there, but these little suckers, that's why they move fast. If you're wondering why you see these, explosive gains. And again, it cuts both ways. When everyone decides to hit the sell button, they fall just as fast. So there's one already coming up to resistance. And again, nothing surprises me in these guys. If it wants to take out that thin zone and run up there to 624, so be it. That would certainly be a final target. If I were to be long this one, which I'm not right now. There's a downtrend line that comes into play, but again, not one I would chase. And there are some that haven't broken out yet. And that's why I'm doing this video, and I'll jump through the ones that don't stand out. Okay, HMLP. This is an LNG. A lot of these natural gas shippers have been moving. Very well defined resistance level right here, about 1941 or so. Actually, you go over the recent highs. There's another high over here. Let's do this. All right, so say you want to be safe, wait for that previous reaction high at 1962 to be taken out. As with all breakouts, you want to see it ideally on above average volume. And most importantly, I can't emphasize this enough, watch the sector as a whole. Pull up your watch list if you don't have one. Go to the website for the ETF SEA, which is a shipping ETF, and then you can pull a list of the components in that ETF. It's not all encompassing, but it has a lot of the shipping and port stocks, so you can then make your own watch list. So there's one HMLP. And as you can see, if I didn't mention it there, the target would be 2340. I don't see a whole lot, maybe a stop along the way around 21 and then 2340. SB, safe bulkers. This one looks like it had a wedge type pattern working here. It did break down from that wedge, and that, like everything else, proved to be a fake out. So as I often say, fewer things in trading are more bullish than a failed breakdown, a bearish breakdown pattern that fails shortly afterwards, just as fewer things in trading are more bearish than a failed breakout. This one has, it already had a failed breakdown, and it's gone up quite a bit. Took out this resistance level here, which actually I don't even know why that line's there. That's a minor resistance level. This is the big level to watch. So if you're long this one, you want to buy a pullback here. Let me give you an idea on this one. So this line here, I have a couple reaction highs, one here, two here, and that line's at 170. It's at 183 now. So you can start buying at 183 down to 170. I wouldn't add below there. Stop somewhat below. If the momentum remains in the sector, then what I would expect is this thing to reverse anywhere at or slightly above 170, and then a punch up to about that $3 level, again, if the momentum stays in the sector. I didn't mention this earlier, but just like the marijuana stocks, when I trade the shippers, my preference is to use what I call a shotgun approach. Sprinkle little bits of money around in a lot of different names. You don't know which one's going to be the 300, 500% winner and which one will be the dud. So if you have enough money, and again, with today's commissions, you can trade stocks as low as $1 a share at Interactive Brokers, other brokerage firms like that. You can afford to, if you don't even have a lot of money, you can put a few $100 in each of these names and spread it amongst, your top half dozen, a dozen, whatever you can manage, and you'll have some winners and you'll have some losers. This was a previous trade idea on the site or setup. Looks like it hit that first target. I haven't updated these charts in a while, so I don't know if that was official or unofficial trade. Took out the second target. You can see that resistance fell just shy. There's one reason that I like to usually set my sell orders just below the actual resistance level, because if too many eyes are watching it, the stock will often reverse just shy. There was also a reaction right there as well, and that's about where we stopped today. So now here's another example. Here's a stock that pulled back to former resistance, now support. So it's right on that line now, that support line. Even though the target was 161, the actual line was at 166. You can see from the pop-up box. See, that stock's trading at 166. Therefore, if you believe there's more upside in this sector, you buy here at 166 with a stop somewhat below. You have to use pretty wide stops on these because of the intraday price swings and those momentum overshoots that I talk about. If it takes that out, your next objective buy point, and I know it's quite a bit lower, is down here, down on that 124 level. The actual resistance would be a little bit above 124, so call it around 130 or so. And again, if the momentum remains in the sector, this just may be a temporary pop. There's a lot of speculative junk going up right now. That's indicative of a market top. We had the recent flurry into the marijuana stocks, and again, I like those from the fundamental perspective, but I think they got ahead of themselves, and I'm just seeing a lot of speculation in this market right now, running things up beyond where they should be. And but that's fine as a trader. Hey, I love momentum. I love opportunities. I could care less about the fundamentals in these companies. I'm not marrying these stocks. I just want to date them. Trade them for a day, couple days, intraday, whatever your style is. OSG, overseas, looks like a minor downtrend line here. Failed breakout, and we're right on the line now. So this one could offer an objective long here. Stop below that recent low, yesterday's low. You can see right there, we're on that downtrend line. First target would be this downtrend line there. That's pretty well defined. And that comes in perfectly, or nearly perfectly right now, with this horizontal resistance at around 10.12. So I would set my sell limit order a little shy of that, maybe be safe 998 or something like that. Give it a pretty good buffer. And ultimately, if you think this sector has a lot of room, then you might want to hold out and see if that downtrend line gets taken out. If it does, I can tell you there's quite a few additional targets along the way once this downtrend line, I'm talking this primary downtrend line, gets taken out. GMLP, it's got resistance here, has resistance around 2176. Not one of my favorites. We'll move on. Here's the sector, shipping and ports, TC2000. That's IX2260. And now this is concern for me. The sector is coming up to resistance right now. You can see here we have a couple reactions back here. You have a reaction right there. You can see that reaction. So there's a sector coming up to resistance. So any breakouts now have a higher chance of failing than they did a couple days ago. In hindsight, if I could wind the clock back and go back a week and had my eyes on these, I would have put those. But if you're a momentum trader, especially in and out in the day trades, you can take some of these because they're still popping. And there's nothing to say that the sector itself can't take that resistance level out. I wouldn't chase the ones that are way up right now, but I'm going to go through these and try to find you a few that haven't popped yet. This one, divergent high, I'm not crazy about that one. I wouldn't chase that here. That's GLOG. KNOP, another one, divergent high. Better fish to fry. See this? I stay away from that. A lot of divergence there, and plus I don't see it just a major breakout point. It's a stock that's at resistance, but I just don't like the looks of that one. TOO, TK Offshore. There's a downtrend line, but more importantly, this is a nice chart. Just keep out, set price alerts on these. See this whole thing down here, all this price action, but really in the last few months, it's been knocking on this level here, this orange line around 672, call it 675 or so. That's a big level. My ideal scenario for this one, you see this downtrend line right here that I have an extension on. This is what I'd like to see with this one. Maybe the sector comes back in a little bit, clears out these near-term overbought conditions. This one works its way up here at this point. That would be an ideal breakout. I love nothing more than when I have a stock, whether I'm going long or short, if I have intersecting support or resistance levels. In other words, they can only intersect if it's a trend line in a horizontal price level. So in this case, you have, what is that level? Let me give it to you here. What did I say, 675 or so in that downtrend line. So break above there would easily fill this gap right there. See the big old gap right here, and there's a thin zone if you look at the volume price histogram all the way up to this level. So I would put pretty good odds that once, if and when this thing breaks out, at minimum you get a gap backfill and quite possibly a move up to the 1350 level, and just try to quantify it in percentage gains to tell you how lucrative these things can be if you get it right. There's about a 16% gain if the gap is backfilled. I have a mild resistance level in between, about 41% above the entry point. Again, that's the entry point, not from current levels. And then all the way, that's 100% gain if and when this one goes to 1350. So it's worth setting a price alert for, over 675, 680, whatever. And again, watch for volume on the breakout to confirm it. Watch what the sector's doing at the time. If you start seeing a lot of these breakouts failing, a lot of the stocks coming in, and this sucker gives you a trigger, a breakout, stay away from it. It's likely to fail if the sector is in a downtrend. The shippers, I always say, birds of feather flock together, and the shippers are no exception to that. They tend to move largely in synchronicity. When one starts breaking out, they all start breaking out together in close proximity. Here's one that there's a breakout that got sold into. It was a clean downtrend line, broke out, had a big move up yesterday. Actually, that breakout failed yesterday, came back in, closed back below the trend line, broke out today, but has since come back in again. So there's two whipsaw signals. You got to be careful with these guys. But if and when it gets some legs here, maybe it's backtesting right now, or it is roughly backtesting, and if that holds and the sector, the momentum holds up, then this one looks good, easily up to that 570 level, and that's a 70% gain. So trade it 70% gain. Maybe you allow yourself a 12-15% stop loss. You could even do a 20% stop loss, and you're still within a 3-to-1 risk reward ratio. And 20% stop loss would be all the way down here, down almost to the lows right there. But again, you can do less than a 20% and then offer a 5-to-1 or better RR. Let's see, ASC. Okay, this one looks like it's trying to pop. Had one little false break here, fell back down. As I say, fewer things are more bearish than a false breakout. Look what happened. That thing popped above. I take that back. I'd take that back. This is hindsight. That trend line wouldn't have been established at that point. I added it afterwards because at that point we didn't have really a reaction there. We had a little bit of reaction, I should say. There was a few days where it stopped there. So you might have been able to draw a trend line. I probably added this trend line once all these other reactions formed because you had a lot of catches there. So far, it's breaking out. It's above it. It broke out yesterday, closed right back on the trend line, moved up again today. We're just above the trend line. You want to see some volume coming into this one. Let me turn up my volume bars so we can see those a little better. A little bit of an increase in volume recently. And targets on this one are tough. If it really gets going, I could see this guy going all the way up here to that 950 level. Certainly you want to target these reaction highs around 8 or so. That would probably be my first target. And there's also some horizontal resistance right here. It may come into play. Or that could be a quick near-term target. Doesn't look like much on the chart, but that right there, it's a pop of 10, 11%. And you could probably get that in easily one good day, or heck, a good hour in the stock, the way these things trade. STNG, Scorpio Tankers, ooh, like this one. Look at this bullish falling wedge pattern. Might need a little more work, in other words, and we're still not at or near the apex of the wedge, but there is bullish divergence in place. It's already spent a lot of energy just to move from the bottom to the top of the wedge in short order. With that being said, a very well-defined downtrend line. Look at all these reactions. So you'll see a pop above there, 542, 645, 755. And, again, if you're comfortable with these, just take the breakout if it looks good and set your stops accordingly. You can set them either based on a percentage gain using a risk to reward ratio to your target. I also like to line that up when possible strategically with support levels. So you have support here around 430. So a move below there. And again, you might want to use maybe a 60-minute closing candlestick. Because of the momentum in these things, they tend to overshoot these support and resistance levels on these very fast moves. But there's a nice looking one that still has plenty of upside, especially a longer term trade, whether it breaks out now, or you track it down the road, set a price alert, which I'll do now if I don't already have it set. I might already have one on that one. There's an alert set now. DLNG, Dynagas LNG Partners. Kind of looks almost like an inverse head and shoulders bottoming pattern. We need to go back out to a 2-day period here to see that trend line. This gives me a 4-year price history. We were just looking at a daily chart. Very clean, nice downtrend line. This circle shows a false breakout. Failed breakout, but this one kind of held up a little. Well, sold off. You can see again, I talk about how bearish it is when you have a failed breakout. That was a big drop from that point. Came back in, 18%. But if and when it takes that trend line out again, that would be a breakout. It's certainly still a valid trend line. Just because we had one false breakout or whipsaw signal, that doesn't mean that trend line doesn't have a lot of reactions. It does. So it's a valid trend line. That's just this. That was a function of the sector. This is when I did the video a couple months back. I saw the sector setting up bullishly, and they had that little false spurt, couple false breakouts that failed. And obviously the sector is now breaking out left and right. We have names breaking out here. Not one of my favorite. LPG. This one trades well. You can see a divergent low right here. See with the PPO. I'm using the PPO because the price swings on these are much larger than most stocks. It works a little better than a MACD. RSI. Divergent low right here. Breakout. Boom. Now we had this downtrend line form. Breakout. Boom. Resistance. This one tagged, ran right into resistance today. If it takes that level out, call it 777, maybe 780 if you want to be safe. Look at today's high or yesterday's high. Next target here is 867-ish, and as well as this downtrend line. That downtrend line is going to come in first, and then if that gets taken out, there's your next target, 867, which is a pretty good move up from where it is right now. GNRT. Pretty well-defined resistance level. Look at the reaction, breakdown. Seems to be flagging, building up a little energy here. I'd probably add a downtrend line here as well. It's not fully developed. We only have a few reactions, but something to watch nonetheless. And again, this might be a story of one that needs to come back in a little bit, maybe put in a divergent low if this one came back in, and then ultimately break out above both this downtrend line and that, most importantly, that 480-ish level. Targets, that one would easily run up to that 580 level if the 480 level is taken out. And after that, I would say 670 or so. Nat, this one has a good, nice dividend. This has been a growth and income trade and a trade on the site in the past. We've had some nice trades on this one before. It's paying a dividend, according to this, if it's correct, almost 12% dividend yield. And seems to be trying to crack above this downtrend line. Broke above it yesterday, fell back. It's trading right around there, maybe a hair under it right now. I'll probably clean that downtrend line up like this. I think it fits a little better like that, capturing that recent reaction high. So this is really a descending price channel there. So this one broke out and it's back testing. You can go long right there. Stop not too far below, and here's your targets. $10, $11 roughly. I'm just rounding off within a few pennies. $11.75, and let's just keep it at that for now. GLNG. Golar LNG Limited. There's an uptrend line, broke down, but regained it, and this was also resistance here. You can see a reaction high there. Kind of held support here, and once that support broke, it melted down. Had another test of that level and just broke out. Some volume coming into the stock so far. So this one actually looks like an objective entry here, with a stop not too far, maybe a daily close or 60-minute close below 24.78, and there's even a gap below that. That's probably a better level right there to see that gap at about 23.54. That would be an ideal stop level, somewhere in there, maybe on a 60-minute or even a daily close. If they backfill the gap, it'll probably go back down here. But remember what happens if that gap is taken out or backfilled. It is support. All these levels are support, but you've had the breakout fail at that point, so you might want to keep stops tight on that one. SFL, nice downtrend line, as well as intersecting resistance, which I love to see. 13.94 is that level, give or take. Pop above there takes you up to 14.96, almost $15, and after that, $16. So nice round numbers on this one, but I can tell you those are pretty decent levels and what I call high probability targets if and when that level goes. TNK, this is a nice one. I've shared this one quite a few times in the past. I had divergences here. They just continue to build. They've only gotten bigger. They haven't been negated or taken out. In other words, the PPO still making higher lows, and the RSI is making higher lows against prices making lower lows. That is the definition of positive or bullish divergence. We have a very pretty well defined downtrend line, which to trigger a long entry. So there it is. I don't know if I have it set. I would have had an alarm go off or an alert if I did. So I'm going to set this right now. And the next punch above there, especially if it's on volume, I have a couple lines here, but this is where I see this one going about 330. And ultimately there's some targets again if the sector gets traction. MATX, that's a mess. Stay away from that one. Dry ships. This is ridiculous. This one I mentioned yesterday is a short when somebody brought up dry ships, and look, I wish I would have shorted it. Down 70% today. Why did I mention it as a short? Well, first of all, the fundamentals on this company are awful. I've followed this stock for many years, and it's amazing how long they've kept afloat. No pun intended. It is a shipping stock, but fundamental story sucks on this company. And the only thing that's keeping them afloat are these little gimmicks, the stock splits. The retail public loves to buy stock splits, especially even reverse stock splits. They like to buy regular stock splits. These are reverse splits, which keep the stock going from penny into penny stockville. That's all they're doing. It's just a little, shell game, if you will, with the share price. So they did a 1-to-25 reverse split, and the stock, took a little while, and then it rallied up about 135% or so. Then recently they did another 1-to-15 split. And again, this is the adjusted price. This stock would have been a penny stock many times over. So they just keep splitting the stock, and I'm trying to measure it for you and just show you how much it's run up. This thing ran up, according to this, if this is all correct, to 2,600% in just a few days. 2,593%, again by a rough tool, right into resistance. You had a big gap here and reaction highs. Like I said, I would have shorted this with both fists had I been watching it at that point in time. And I did mention it yesterday. It'd come back in a little bit as a potential short trade. The brokers will require a lot of capital when you short these suckers, but there it is. So like I said, there's opportunities on the long and short side. Some of these stocks have gotten ridiculously ahead of themselves. There's no fundamental justification for the move. It's purely technical driven, short squeeze momentum traders. And I wouldn't even go long this one on a pullback. Again, I just don't like the story on dry ships. TGP. Well, this was a former trade. I don't know when, it's not active right now, I don't believe, but that target was hit, and maybe that's when we took it off. It looks like a first target was hit, pulled back in, and I can't make a case to go long or short right now. There's some support right there. You could go long here, 1350, but again, don't chase the sector right now. We're coming up to resistance. That would again be the next target, and then these potential second, third targets I had from that last trade in TGP. NVGS, downtrend line broken out, little basing pattern here, hit resistance right at that line. If that level's taken out, you have your next targets up here at 1034. CPLP, we could probably put a downtrend line on this one. Yes, we can. It's a downtrend line to watch. And we have, it's pretty thin. Not my favorite, but I'd have to study that chart a little more to give you a more accurate target. But I would just right now, off the cuff, say 390, and then certainly that 475 level. DAC, here's another one of these crazy low price shipping stocks, 106% gain, came back in, it's down 23% today, and from the highs yesterday, it's already come back in 36% and just from yesterday's highs. So again, if you're not comfortable with these, do not trade these stocks and keep your position size small if you do, to account for the oversized gain and loss potential in these guys. GASS, there's a stock. Again, this is what I talk about a lot about breakouts. And I used an example with the IWM the other day. IWM spent a lot of fuel, burned a lot of energy just to get up to where it's at now, challenging its 2015 highs. And when you have that, from my experience, any breakouts, even if you get one, prove to be fleeting because the stock has burned up too much energy, if you will, so to speak, to get to the breakout point. So this is certainly a level. I've had that line here. You can see Mike must have just done this one recently, 921. Okay, this one I might have marked up yesterday, but you can see where the reason for this line. There's reactions here, above, below, reactions from above, and so it hit that level. It's pulled back. Might need to consolidate those gains, and sometimes the consolidations can only be a day or two in these guys if the momentum stays in the sector, and then it moves up to there. But as of now, you need to wait for a break above 405 on volume. To be safe, take it above yesterday's highs, which are 415. That will have cleared yesterday's highs. That'll be a little more bullish, a little higher probability entry, and then that one might run up to 525. KEX, traded this one in the past. It's been one of my favorites in the past. I'm just not seeing anything on the chart that stands out right now. Salt, this was a big level I've highlighted in the past. 406, tap, tap, tap. This is what you call a basing pattern. Here's a stock that's been basing for the last year. Numerous attempts. It's had a few very brief failed attempts to get above, but this was the real deal. This was a breakout. It was confirmed on high volume. See the volume bars? And that target is 687. Now, the stock is in what I call no man's land, which is smack between support and resistance. It's right in the middle. I don't buy stocks in no man's land. I don't do that because it's hard. Well, in this case, you do have a support level. I didn't notice there's a little gap there. So, although not my favorite, you could go long here at 515, as this is now support down at 481. You wouldn't want to put your stop all the way back down. This is key support right here. This would be a gift if the sector's holding up and looks good at the time. A pullback to that 406 level, 410, 415, 420. You might not want to try to catch at the bottom. Start scaling in there with a stop not below. This is what I call minor support. This is solid support. It was a big resistance level, the bottom of that basing pattern. So if you're looking out longer term and the sector continues to come back in, that's where you can position long, and ultimately for a move back up to the 687 level. 1061, and ultimately over time, if the sector really gets some traction, 1641. FRO, I've liked this one a long time, traded this one actively. This is the one yesterday. Well, what am I saying? We hit that 798 target. See, as I always talk about, I set my sell targets below the actual resistance level. There's no hard set formula. It's intuition, experience. I look at 805 on some stocks. I might set that target at 803 or 802. On this one, I set it at 798, which, as you can see, well, today we went to a high of 805. Well, there it is. There's technical analysis. Yesterday we hit a high of 798, which was exactly where the target was, and pulled back. Today we hit 805 and pulled back, right exactly where my actual resistance level is. So far, so good. It's holding up. It's followed up. It took out yesterday's highs today. It may be building energy as long as the sector holds up. My expectation would be once we punch through 805, solid break, maybe a 60-minute close should usher in a move up to that 890 area. And, these are additional targets. If you guys are long-term believers in the sector and you want to position, maybe just set your stops at break even or something like that, you can certainly let these ride. And that's a possibility to see that $11 level over time. SSW, nothing there. DHT, nah. TNP, downtrend line was taken out, but that breakout has failed. A few reactions, not my favorite trend line and not my favorite pattern, so I'm going to move on. GOGL, here's another nice basing pattern. As you can see here, it was a reaction from above back there, so that's where that level started, and there's been numerous attempts to get above this level right here, including an intraday break yesterday that failed quickly. So that's 486. Yesterday you can see we just popped above that level briefly, so call it 490, maybe even $5 to be safe, but keep an eye on that one because it's been basing for a while. Look at the volume, a lot of volume coming into the stock, and if it goes, Here's your target, 619. Again, these are unadjusted targets. They're not adjusted for an optimal fill, and I think ultimately maybe up to 1170 or so, somewhere about there. I'm not looking for this thing to move up to 18 anytime soon, but that's longer term. Again, if the sector holds up, if the market holds up, that's a possibility over time. Either way, this one's been basing and it looks pretty good. SBLK, downtrend line, symmetrical triangle, breakout, but this line here, this uppermost line around 585, there's a gap back here that defines it, a reaction high, failed attempt again at that level recently. So we need to take out that 585-ish level. And then if we do, it's very thin. I look at the volume price histogram. That's a thin zone, I'll call that. It's comparable to a gap. It's not exactly the same thing as a gap, but very similar, means very few trades occurred. And that one could have a quick move up to, what is that level? 992. So that you're talking a pop of 70, 71% or so. Not bad if it does that. NNA, this one already broke out. Train has left the station. There was a downtrend line that I had, breakout, back test, explosion right up to a pretty solid resistance level. This one, and it already came back in a little bit. Now it's at support. So there's another story of one that broke out, has pulled back to support. If this level doesn't hold, give or take, then it comes all the way back into here. That might be your next buying opportunity down at the 140-ish level. Although you could take a shot here. Again, I'm throwing caution to the wind right now on these guys and just watching, and mainly because the sector itself, as I've said, is at resistance. But there's your next target if that does hold, if you want to go long there. And you need to take out, of course, that next buy signal. If it reverses here off this 164-ish level, then the $2 level is the next resistance / target. Then above that, 237. Let's just leave it at that for now. Tops, nah, don't like it. DSX, Diana Shipping, looked great here. It was a breakout. I didn't have an alert set. I had this trend line, which I now modified, but before that, if I didn't do it, that trend line's been there for a while. And boom, exploded right up to resistance. You can see this reaction. This is a major resistance level here. So over time, if Diana works its way up here to the $6 level, that would be where I would get out of Dodge. Meaning sell all my shares, be out if I was in it, but I'm not. It has pulled back to support here, and if that doesn't hold, there's some support along the way down, but it's certainly that 350 level is an objective area if you want to go long. If that level holds, that would be bullish for the stock and may work its way, like I said, over time back up to the $6 level. Eagle. This is a high flyer. This one moves big. Doesn't look like much here, but it's about a 200% gain just a few days there. Broke out, hit that level, resistance right here, at 1264, and it's come back in for a near back test of the wedge. So this is a low price sucker, but it had a nice divergent low. So from a charting perspective, this one still looks good. It's had a breakout, a quick pop. You can recycle back in here on the near back test. There's also, I should add, this is a nice chart actually, some horizontal support here. I'm capturing that reaction low, these reactions, this one roughly, give or take. And that comes in with a back test of the wedge, and that's around 650. It's at 750 now, a little bit above there. Had I done this video earlier, we would have been able to, I could have pointed out there that would have been a good buying op, and it may still get there. So it's not over. That's why I'm doing these videos. These things are moving quick. You'll see it. See these things trade through these levels. So along there, with a stop somewhat below for another thrust up to here, and if the sector continues to catch a bid, then you have resistance at 2330-ish. You ultimately have a potential downtrend line here. It's only potential. There's a few reactions there, but that's Eagle. GNK. I just looked down at the time, guys. I didn't realize how long I could talk about these things all day long. And like I said, there's so many of them. You see, as I'm going through this chart, I can't tell you which one. There's not any one favorite, but here's one I didn't have drawn up on the chart, but it's just a beautiful falling wedge pattern that has broken out. Great illustration of technical analysis. I'm going to leave it here at this one since the video has gone on long enough. But there was your divergent low breakout. The breakout was confirmed on high volume. You can see it right there. Prices came back in, and this one has since been moving up. Certainly at this point, I wouldn't chase it here. That one's probably met about its measured move. If you take the distance widest part of the wedge right here, roughly, and you add that to the breakout point, shows you we're probably milked most of the run on this one already. But again, it's just an illustration of technical analysis and how well these chart patterns work. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.